Today, we're going to look at two stocks and evaluate which one could be a better opportunity to invest in, Rocket Lab or gold. I know gold's not a stock. Don't get pedantic on me. But let's look at Rocket Lab versus GLD. So first off, Rocket Lab, this is in the industrials sector. So the market is bullish. We've got a bullish trend, a buy signal with bullish breadth. That's great. We have this sector, the industrials, that's running up, which is great. So our fear and greed and our breadth are both bullish. But the stock, let's take a look at this. The trend is bullish. The signal is a buy signal. The fear and greed is growing, more to greed, less to fear. And it passed through this order block right here. It passed through that. Actually, I think that's a drawing I put on here. In fact, let me remove all this. Remove 5 drawings. Yeah, it's already passed through any order blocks right here. Rocket Lab looks like it's a rocket ship right now, right? You got that bullish trend. You've got the buy signal. You've got everything working for it. Now let's compare that to gold, GLD. All right, gold just crested through this order block right here. How cool is that? It jumped right over it. That is a really, really, really bullish sign. Why is that so bullish? Dude, all the sellers right here who have been waiting to get out, they're done. They're gone. Who's left to sell? Only the people with like 10 cents on top of it. Now, new all-time highs is bullish AF. That doesn't mean every time it hits new all-time highs, it goes on forever, right? But look at this chart over here, right? New all-time highs are bullish AF, but it continues on and continues on and continues on. Now, the thing is that you can get on a trend anytime as it's going up, like gold did right here. But there will come a point in time where it stops going up. Your job is to recognize, oh, you know what? I got to get out, right? Now, I don't look at candles. That's not my thing. But, you know, some people would say, look at this candle. This candle's a big significant meaning because of X, Y, or Z. Okay. But let's think of it from a different concept called the greater fool theory, right? The greater fool theory is that if I buy something today, there's always going to be a greater fool to buy from me tomorrow. That's exactly what happened in the Tulip Mania. That's exactly what happened in GameStop, AMC, gold in this run right here. What else? Tesla in 2025, where market cycled around. There's always a greater fool to buy it from me. Pokemon cards. But there will come a time where you buy the top. Again, we can buy any way up or anywhere up, but there will be a time where you buy the top, and that's okay. Don't be discouraged by that. It's happened to me too. It happened to me not long ago. All you have to do is say, cool, no big deal. I'm going to get out the way. I'm going to get out of the way. And then as it does what it's going to do, you don't have to be involved anymore. Right? So gold farted around. It went sideways after that. All right. It came down right here. It tried to come back, got rejected a couple times. But now, as of today, it crashed through that order block. You can see right here. So to me, if I had to choose between Rocket Lab and gold, I would actually pick gold. It's already in a bullish trend. I believe it's already got a buy signal in. Yeah, it's got a buy signal that came back on November 25th. I would be more interested in gold because it killed that order block, right? The people who were going to sell, they've already sold. What's left? Rocket ships from gold, not Rocket Lab. Great question. All right, today is Ask Me Anything Friday, so I'm going to answer as many questions as I possibly can. Let's continue on here. Manny, if we have to roll up and out of an option contract today, yes, I do need to do that. As of the time I'm recording this, I do need to do that today. What do you do if the spread is too wide or the intrinsic value is more than 30%? Well, there may be a couple things, right? So let's take a look at that. So Jeff, I have to roll today. Why? Why do I have to roll Jeff today? I have Jeff, Nog, and WMB. My rule is that within 1 week to expiration, I need to roll. So the question is it already profitable? Well, Nog and WMB are not. Unfortunately, those didn't work out. So I will close those today, period, full stop. I'm not even going to stress on it. Can I roll up and out for a credit? Right? We have to roll for a credit. If we roll for a debit, we've done it wrong. Now, Jeff, we're up over $5,000 on that trade. So let's go to Jeff and let's go to roll. Let's go to the options grid. Let's go to Jeff. All right. So to roll, I would need to go from December to January because there's not any weeklies. if I go from 57 to 57, I'm going to have to pay a debit. I don't want to pay a debit. So I'd have to go from the 57 to the 60s. Okay. So 57 in December to the 60s in January. That gets me around the 68 delta. I like that. 211 of extrinsic on $6. 211 on $6 gets me 35%. Man, that's a little high. And it's a little bit wide on the bid and ask. So I'm going to wait for the end of the day. I'm going to wait. But on Jeff, I've already rolled it twice. If I take in a credit of 65 cents, then let's see. I bought it for $5.35. In fact, let's do this. $5.35 minus $2 minus $1.95 means I have $1.40 left of risk in the trade. So if I could roll it for $1.40, I have no risk in the trade at all. Am I going to be able to roll it for $1.40? I don't know. But what I'm going to do is I'm going to wait until the end of the day. If by the end of the day that this tightens up and comes in around under 30%, there's a great chance I'm rolling it. If it's slightly over 30%, I may fudge my rule. Now you're probably thinking, but Chris, the rules. Look, I get it. I get it. But I also understand that if I'm at $1.40, and my original trade was $5.60, I've already taken 75% of my risk off. I've already taken 75% of my risk off before rolling it today. So whatever I do after that point, we're going to be under 20% risk, maybe 10% risk. I will give up a couple pennies in extrinsic value to get down to 10% risk in the trade to let it run. Now, some of you are going to be like, this guy, Chris, such a scam artist. He's not following his rules. Listen, if I give up 2 or 3 pennies in extrinsic value, but I get to keep the trade on for another 2 weeks and I make tons more money in that time, I think it was worth it. I think it was worth it. So that is my plan for the day. We'll see. Hopefully it pulls in. I don't have to stress on it. Goody. What was your breaking point? And what did it really take within you to make options work where you were mentally, and how to conquer your mind to pursue this even with the ups and downs? I'll tell you exactly. I'll tell you the moment when I was like, there's something not right here. So I don't remember what year this was. I would say it was probably around 2016-ish. So I started trading 2009. You know, I made some money, lost some money, but it's somewhere around the way. I think it was 2014, 2015. I found, I'm going to call names now. I found Tasty Trade. If you have found Tasty Trade, type a 1 in the chat. And I drank all the Kool-Aid. And I was so down the rabbit hole of selling options is the greatest thing since sliced bread. Because the stock can go up, it can go down, it can go sideways, and you profit no matter what. And I was like, man, easy money. Let's go. Let's do this thing. So I traded it for a year or two. Yeah, this had to been 2014, 2015. Traded for a year or two. 2016, 2017, somewhere in that time frame, came around and I looked at my account at the end of the year. I was down $200,000 and had an 84% win rate. Now, you've heard me talk about that a lot. That was real. Have you ever been down $200,000 with an 84% win rate and felt like a winner? Probably not. But I won 84% of the time. How could I have been down $200,000? And that's when I had to have that real hard conversation with myself. And it's like, listen, this is not working. Absolutely not working. You can't do this anymore. And so my next thought was, okay, I need to learn from people who don't just teach theory. I don't need to learn from derpy jokers who don't know what the hell they're doing. Because I had to be, I felt like I was the only one who was totally wrong here. How could I be the only one that doesn't make money selling options? How could I be that one person that didn't make any money selling options? So I started working with Steve Burns. Now, how did I get to meet with Steve Burns? It was called persistence. It was me following him on Twitter, me DMing him on Twitter, me making all of our my comments and replies to him on Twitter. And eventually we developed a little Twitter relationship. And I was like, Steve, is there any way that you could teach me how to trade? And he's like, you know what? Probably could. And so Steve and I started working together. And I remember specifically, good, you've heard this story. I remember specifically telling Steve what I was doing in my old trading plan. And specifically him saying, oh yeah, I used to trade that way too until I realized I wanted to make money. That hit me like that was a knife through the heart. Oh, I used to trade that way too until I realized I wanted to make money. And so then I went deep with Steve. Steve connected me to 5 market wizards. Biggest blessing of my life was Steve. And it was exceptionally difficult to break those habits. I mean, when I would put on a trade, I'd be like, oh, I gotta sell this. No. I can't sell those puts anymore. I have to buy the long calls. Oh, but I just learned over the last several years that buying calls is a loser's game. Oh, this is so hard. But you know what happened? I bought the calls and I made money. And I didn't make like, baby money. I made good money. I remember going to a Boy Scout camp out with my kids and just feeling like I was on top of the world because I had this new trading strategy that I learned from Market Wizards. And I was up over 300% on this one trade that I was trading during that time. I was on KHC. And I was like, man, this is what it's supposed to be like. This is what effortless trading feels like. So, I mean, it really came to a breaking point of how could I be the one person in the world who can't make money from this? Maybe it doesn't work. And then moving on from that point. Glad I could share that story. I really hope that helps you guys. It's not just a let me talk about my sorrows. It's I hope that this can help you in some way kind of situation. And the Schlummy says, I understand your heavy critique of selling options, but I haven't heard you make any comments about rolling options for more safety when a trade doesn't go your way to prevent. Oh, good gravy. You want to see some hot bologna sandwiches. Hot bologna sandwiches. Listen, here's the deal. Selling options, number one, breaks the golden rule of leverage. The golden rule of leverage is never put yourself in a situation where you can lose more than you can win. Iron condor. Iron butterfly. And maybe Schlummy was the actual guy who was making money selling options. I don't know. Schlummy's obviously very smarter than me. But I did that, dude. Trust me. When I say I drank the Kool-Aid, I drink all the Kool-Aid. I drink every flavor of the Kool-Aid. Okay? Now, I will tell you that had I not drank all the flavors of Kool-Aid, I wouldn't know as much as I do now. So for that, I am grateful. But let's talk about the quote adjusting options, right? Let's say you start with this trade, okay? And what happened to me every single time is I put on Iron Condor. And first off, let's say you had my risk return was more like 100 and 400, okay? And then the tasty trade people say, no, don't do that. That's stupid. You don't want full profit. No, that's dumb. You want 50% profit. So now I'm risking 8 times what I could possibly make, 400 to 50. Okay, there's your 6, 8, 10, 12. And then what would happen every time almost, well, I shouldn't say that. It only happens 16% of the time, felt like every time, was it would blow out one way or the other. It wouldn't just make a baby move. It would make big old moves, okay? And then the tasty trade, incredible knowledge, is when that happens, that's okay. Just sell more options. Just take these options over here. Let's say that it went up, right? Just take this put spread and then roll it to even right here. Just take your put spread and roll it up to here. So now, yeah, this is where, this is the hot garbage dog doo-doo that they try to teach you. First off, you're losing hard. But roll it up so you take in more credit. Oh, cool. So I took in $1 credit, even though I'm only going to take 50 cents. But roll this put spread over to at the money. So now you have an iron butterfly, okay? Which looks like this. So now you have an iron butterfly. So now you took what was a decently wide profit zone and you've smushed it up into nothing. You've smushed it into a itty bitty baby profit zone. This was like $20 wide. This is like $4 wide, okay? Or something like that. And take an additional credit of, I don't know, like 40 cents. Which you don't get all that. No, that'd be stupid to take that whole thing. You're only going to take 50 cents of that, okay? So now I've taken my risk from $400 to $360. Sweet. 360. Okay, I've reduced my risk in the trade. That's great. My max gain here is going to be roughly 70. But also my max gain is now this itty bitty baby profit window, this impossible to hit iron butterfly. There's no possible way this is ever going to happen, iron butterfly, because first off, it's trending like a gangbusters out of here. And then let's say it does come back. Even if it does come back, do you actually think it's going to stop right here? F no. It's going to go whoosh. It's going to go right off the page. This is what happened to me time and time and time and time again. So Schlemmy, bro, if you're making money selling options, by all means, you continue to do it. But my itty bitty baby brain could not figure out how to do it. My itty bitty stupid baby brain that has made at least $4 in the market could not figure out how to sell options effectively. Even with those adjustments. Those adjustments can go jump off a bridge. I'm not passionate about it. I'm not bitter about it. Okay. So AJC says, are you trading options on SPX? I have not traded options on SPX in a minute. And I mean like a decade maybe. I can't find any that meet the bid-ask spread. Well, probably because you're trading the SPX. Go to the SPY, you're going to find it. You're going to find it. SPY is way more liquid in that case. What's the benefit of rolling versus a trailing stop? Okay, cool. That's a great question. So rolling up our options here, let's use Jeff. First off, we're still going to use a trailing stop, right? The 1020 trailing stop still exists. Looking for the outlier sell signal still exists, okay? When we roll, like for example, I bought Jeff for $5.35. I rolled it for $2, meaning I got out of the 52.5 and bought the 55s. I really like having the trade information up here. It makes it so much simpler. I bought the 52.5s for 55 or 535 when I was trading 56.96 down here, way down here. I rolled from the 52.5 to the 55. So by doing so, I took in $2 of credit, which means 535 minus $2. I have only $335 left of risk in the trade that started at 535. Pretty cool, right? Now I can go trade with that other $2. I can do anything I want with that other $2. That's partial profits that are back in my pocket. And then it moved up some more. So I rolled again from the 55. So I did that on the first, the third, and the fifth. I rolled from the 55 to the 57.5, and I took in another $1.95 in profit, meaning my risk in this trade is down by 75%. My risk in this trade is down by 75% from where I started from. And I can do whatever the hell I want to do with the credit that came through here. So it reduces risk. It keeps the trade on. I'm not selling off any of my trade. I'm still keeping it on. So I have roughly the same amount of deltas that I started with. And partial profits keeps the trade alive and frees up capitals that you can go make trades with. It is one of the greatest ninja hacks of all time. Let's see. If I close today, why wouldn't I put on a trade for the next expiration? I don't know. I can't seem to find options in TradingView Mobile. That sounds like a Google question to me. I missed the original entry on an option, and your plan is a rolling point similar to an entry point. I would not consider rolling points entry points, right? I'm not looking to add position here. All I'm doing is taking risk off of the trade. If you miss an entry, you miss an entry. I know it sounds crazy, but if you miss an entry, you miss an entry. It's just part of the game. It's just part of the game. Let's keep going here. Did I hear this week that you have no long-term holdings? No, I have no long-term holdings other than my house and my interest in OVTLYR. Those are my only two holdings, right? Why? Because all stocks are bad. Literally every single stock is bad. The SPY is bad. The Qs are bad. SoFi, as crazy as it sounds. Well, SoFi can't be that bad. Nvidia's bad, Tesla's bad, but every once in a while they act right. When they act right, that's when you get in. When they're not acting right, you get the frick out the way so they don't take their money or take your money from you. This may be obvious and simple, but is it possible to move Deep Thought's templates as a whole to fit where I place the trade? So I think that that's a Deep Thought question in the Discord. But he and I chatted, and I think he said that he's coming up with some way where you can like key in your entry price, and then it'll adjust the lines to where that is. Because he watched me do it one day, and he's like, "Oh, this is a slow way to do it. I think I can find something better." So I can't speak for Deep Thought, but I am pretty sure he's working on that. Wally Hughes says the end of day and the price is almost at a roll point. Wouldn't rolling and locking in the credit be better than the risk of pullback the next day? For sure. Actually, yeah. It's almost at the roll point. Wouldn't rolling and locking in the credit be better? Absolutely. I do agree with that. Now, here's the thing, right? Even though I put these as like rolling points on the chart, it doesn't have to be exactly that. I mean, you could do it 10 cents on below it and be like, okay, cool. Or you can come up with some sort of logic and reason behind, like right here, right? It says 63.19. My rolling point is listed on the chart as 63.47. I would still look to roll it. It's in the ballpark, right? We don't have to be super precise in this case, right? We're not trying to we're not trying to be precise on the exact penny of rolling. What we're trying to say is, okay, the stock has moved up a good amount, roughly an ATR. Now could be a great time to get in. Why are you not adding trades since you have cash? Why are you not adding trades because you have cash? I'm trying to, and I don't want to come off sarcastic or ugly or mean girl or anything like that. But just because I have cash does not mean that I'm going to trade it. Absolutely not. I have this, you've probably heard me say this before, but it's sit in cash and don't F up your portfolio on purpose. Sit in cash and don't F up. Don't be a derpy joker. Don't let the derpy joker who's sitting on your shoulder. Hang on, let's see if we can come up with a good derpy joker voice. Let's see. Yes, you need to go and buy something today. The derpy joker thinks that here he's sitting on your shoulder. He's like, yes, today's the right day to buy some new stocks. You have cash in your account. And then Batman, where's Batman? I have derpy Batman as well. Although I'm a better looking Batman. Don't do that. Obviously, only trade if you have a setup. In the meantime, sit in cash and don't F up your account. No, don't sit in cash. F up your account. It's the best thing to do. It's so fun. Oh, geez, I dropped him. But reality speak, I don't have any setups for today for new trades. If I did, then by all means, I would be buying them. And that's my trading plan. Right. I'm going to take this trading plan into US Investing Championship next year, and I'm going to dominate. I'm not stressed about it. I'm up roughly 50%, give or take, for the year right now. So where I'm going with that is you have the opportunity to do anything in the market, but that doesn't mean you should. Doesn't mean you should. You should follow your plan. He just saw the Bucky Santa behind Chris. It's been there the whole time. Carol, no, you're disturbing. Shouldn't the derpy joker have a British accent? If I could do a British accent, totally would. Batman watches as long. There you go. I don't think of them that way. I think of them as sunk cost. Any of my watches are sunk cost because I have no plans to ever sell them. They are my watches. I will give them to my children. They are part of my generational wealth. I'll put it that way. Would you ever add to a winning position? Ooh, this is a great question. I have a great story about this. A few years ago, we went to Galveston. By the way, Galveston beaches suck. They're muddy, they're ugly, they're full of jellyfish. Not my favorite beaches to go to. But we were in Galveston. And I was in a trade, I was in a T-Mobile trade, TMUS. And in that trade, I had rolled and doubled, right? Not just roll up, but roll up and double. Roll up, double up, roll up, double up, roll up, double up. I'm winning. Anytime you do this, you're adding additional risk into the market. Okay. And I remember specifically thinking I was a genius when we landed in Galveston and we're doing our thing and feeling like an absolute fool by the time we left Galveston. Why? Because as it was going up, I wonder if I can find that. Hang on. I don't know when this was. I couldn't tell you what year that was. But maybe it was here, 2021. Maybe it was here. Let's just say it was here for example's sake. Rolling up, doubling up. Every time it moves up, adding to the position. So here, 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 here. Right. Okay. Now, let's say that I started with one train that left the station, and then another train left the station, and then another train left the station, and then another train left the station. And then all of a sudden, I now have 4 trains barreling back down on me as fast as possible. Right? It was all great while I was winning, but the moment that the market turned around, it was like I had 4 times the size coming right back at me, which is exactly what it did. And you know what happened? It wiped out my gains. And I was like, this freaking sucks. This whole roll up, double up thing, that's for the birds. How about instead of adding my risk, because that's what I did, it's like doubled, tripled, quadrupled, quintupled, septupled my risk all the way up. Rather than adding risk, I probably should be looking to reduce risk. That was a really difficult day. If expectancy improves the more trades you put on, is it better to risk a smaller percentage of your portfolio so you can get into more trades? That logic makes total sense to me. That logic absolutely makes total sense to me. Now, you have to decide how much risk you're willing to take, because you can put on a risk small enough where you don't care if you win or lose. Like, it literally doesn't do anything to your account. Or you can put on a risk big enough where every single tick, you can't take your eyes of it because you're terrified of what's happening. I think a lot of people are in that boat. You got to find where that balance is. For me, I did the Kelly criterion, and the Kelly criterion said my position size should be something stupid like 24%. And I'm like, hell no, I'm not doing that. But in theory, that is the best expectancy. So I'm going with a quarter Kelly, which is 6 1/4. And I do not want anybody watching this to trade that. You're not ready for 6 1/4. Trust me, you are not ready for 6 1/4. A lot of people, and we've had a couple losing trades. Amongst all these incredible winners that have grown my account bigly, there have been a couple losing trades. And there have been some people who can't get around the fact that they have losing trades, right? Even though this is what's happened to my account in the last couple of weeks, gangbusters in this particular account, up 28 grand. I think that pays for a couple years of OVTLYR at least at 82 cents a day. They can't get around the fact that some of these trades actually resulted in losses. And because they resulted in losses, right, they can't handle it. This is roughly 6%. This is roughly 6% right here. You really think you can handle 6%? I don't think you can. Oh, I'm going to show this guy, Chris. I'm going to trade 6%. Fair warning. You need to have the cojones to do it. You need to not panic sell to do it. You need to have a plan with mathematical expectancy off the charts to do it. If you don't have the confidence in your plan, you're going to get killed. In fact, Mikey Mike the market maker, one of our alpha students, he was trading at 1% and doing really, really well. He was like, cool. You know what? I feel really confident. I'm going to go to 5%. So he goes from 1 to 5%. The very first time it hit a loser, the very first trade after he went to 5%, it was a loser. He did nothing wrong. He did absolutely nothing wrong in the trade. He followed the trade. You know what happened? All of his gains were gone. All of his gains from his previous winning trades, his 1% trades were gone. And he did nothing wrong. And I don't fault him in the least. What happened was he jumped too big. Go from 1 to 2, 2 to 3, 3 to 4, 4 to 5. Don't even think about 6. I'm just saying, if you can't handle your plan, and listen, a lot of you are going to be like, I can handle this. I can handle this. If you've never stared in the face of a losing trade, I talked about this in OVTLYR University yesterday. If you've never stared in the face of a losing trade and said, I'm just going to follow my plan, it's going to do what it's going to do, and you really think that you're going to stay in the trade, I would challenge you to actually go through that with a 1% position and see how you act. Because you're going to feel really crazy. You're going to feel all kinds of emotions if you're coming in with this size that's 5 and 6 times as big as that. If you are already at 1% feeling the heat, feeling sweats, feeling like you can't sleep at night on 1%, oh, you're toast. You're never going to make 5% unless you scale up into it. Speaking of Mikey Mike, the market maker, there's Mike right there. Do you have a cutoff outlier signal return number for picking stocks, such as no lower than X% return? Oh, no. That's actually a great question. As for right now, I don't. I'm just looking for any positive return. I might amend that in the future and say, it needs to be greater than 20% outlier positive return. Honestly, Mike, maybe that's an enhancement I could make. I like it. I like it a lot. You know what else I like? I like being able to give you the ability to click one of these buttons to save time, make money, and start winning at less risk. You guys click that. Have a fantastic Christmas, and we'll talk soon.